We watch the news, we read the papers, interest rates for mortgages going up. Can't really control that with the economy the way it is. So in a volatile rate environment, it is very important to pay attention to the market and let your loan officer know to lock your interest rate. So that can be done verbally, can be done in writing. But what happens sometimes is you get loan officers that like to what we call ride the market. So they will tell the borrower, oh, the market's fine. Let's just wait a little while. Maybe they'll get better. Okay, that's very dangerous in today's environment. We could do that in the last couple of years because rates were very low and you might get a tick a little bit down right before closing. Yeah, you could ride the market. Today we don't do that. So it's very important to lock. So when you say the word lock, that means you are confirming an interest rate that's going to be that interest rate on the day of closing. And years ago, or even up until recently, the only time you could lock an interest rate is when you chose a property. You had to have a ratified contract, which is a fully signed contract that specified a property you were purchasing. And this goes for refinances as well. Now, what we have at SNMC is a program called Lock and Shop. So it is a great benefit to borrowers because we actually allow you now to lock your interest rate before you go to contract. That is a rare occurrence. Not too many lenders are doing that. There's a handful of us that do it. It's a risk for the lender, but it's a benefit for the buyer. So it's something that you should take advantage of. We allow the Lock and Shop product on all of our conventional FHA, VA, USDA products. We just don't allow them on the jumbo, the portfolio, the ARMs, any state housing bond programs. Those rates don't offer that option. So you can have a 15-day lock, 30-day lock, 45-day lock, or 60-day lock, and you must close before your lock expires. Now, we all know there's circumstances that can happen beyond your control. Of course, we offer extensions to these lock-in dates, but sometimes that may cost a fee to do that, which is a customary charge. So we'll say 30 days to look for a house, 30 days to close. You could have already locked your interest rate for 60 days and had that rate the whole time that you were still looking, versus having to wait until you went under contract and trying to lock for only 30 days. One thing you can do in an interest rate environment like this is you can change your product. You can change your rate. You can increase the rate because that gives you more money from the lender to maybe go towards closing costs. So rates can be moved around, but the key is that you have to go back to the day you locked it and put that scenario back into place on that day. You can't just say, oh, I think rates are better because it's Tuesday and it's raining. You can't just better an interest rate after you've locked it in, okay? You can change it, but you do have to go back to the day that you picked from that rate sheet and take whatever it was that day. So if your lock expires, you can pay for an extension. Usually what the standard would be is let's say your appraisal was late. Everyone's scrambling, you were supposed to close. You can extend a lock sometimes for about 10 days, and it's usually anywhere from 1/8 to 1/4% of your loan amount. That's called a point, 1/8 or 1/4 point to get the 10-day extension. But the Lock and Shop is just something that only a handful of lenders do, and we're very excited that we can do that.